Welcome back to Power Lunch. The Nasdaq hitting all-time high in today's session with Facebook, Amazon, and Netflix leading the charge. But you know which tech stock is one of the best performing?
What, Mel? What
Not on the Nasdaq. It's IBM. Tim Seymour, Guy Adami joins us for a very special Fast Money Meets Trading Nation edition.
Awesome.
Right now, the reason why we're talking about IBM is because it's close to the level at which Warren Buffett bought the stock. So he's close to starting to make a profit on the stock. The stock's up, what, 27%?
Yeah, 175 is the all-time high on the stock, or getting back to, I should say, the two-year high on the stock, and a place that a lot of people didn't think it could go. So what's happening slowly? That business is being transformed. We know about the cloud business, the reliance on hardware and infrastructure no longer. The problem with 2016 for the bears to load their guns is that this is really non-recurring, non-operating revenues that have gotten these guys to $13.50 a share, and we still want to see this inflection point, if we will,
right,
in terms of the cloud business and the stuff that's really the more exciting side. They are, I would argue, doing better than Oracle because they have things like Watson and they have these other new businesses along with their cloud apps that people are buying into.
I mean, RBC was just pointing out that AI, artificial intelligence, was going to give them the stability they need in terms of margins. They're going to, if they can really make that business work, that'll continue to be the engine for this turnaround.
Yeah, could be. Listen,
You're doubtful.
I've been doubtful, and until recently, it's been the right way to be. But you know, the reason I own IBM 4 or 5 years ago is because they had vision. They knew it was going to happen 2, 3 years down the road because they had that recurring revenue
stream. They would
stream.
give like a 5-year forecast,
and they were right,
like that,
and they were spot on, and that's why they deserve the valuation they got.
You know, and people challenged the company in the last couple of years that they were almost too spot on, that they were managing earnings and managing earnings expectations, and it wasn't necessarily fundamental.
Very GE-like, by the way. But then the world changed on them, and it changed extraordinarily quickly. So you have to ask yourself this question. This is a company that probably has, at best, 4% EPS growth, at best. And I'm probably giving them a break. Declining revenue stream until recently, we'll see. What's the right multiple? Right now, it's probably trading close to 13 times. And I understand the enthusiasm behind the stock, but I got to tell you something. They report next week, I think on the 18th or 19th.
19th.
They better knock it out of the park. Otherwise, the valuation that they see with 13 is going to be close to 11.5.
Well, the forward multiple is about 11.5. It's a 3.5% dividend yield, and you've got an environment where, compared to some other mega cap tech, even a Microsoft, this thing, you know, you can make a valuation argument for IBM for a company that slowly is doing what they're supposed to do. So I don't think the bar's as high into these numbers as people expect, unless they tell us that this core business, which is now, you know, the PTI, is starting to make a profit. I don't see that reversing.
You know what's interesting is when IBM earnings used to come out, they used to be a bellwether.
No.
We used to watch them, right, for the rest of tech, and now it's sort of like, IBM reported. That's
Maybe it could be what was old, could be new. And by the way, you know who just walked in here? You know.
Karen Feinerman, the chairwoman.
I don't know if we can get her on camera. I have no
Nathan's
idea how
here.
to
The
do
gang's
that.
all here.
Everybody's here. I mean, this is like a
it's a
party here.
Yeah,
it's like the dream team.
Here she comes.
We'll
She's
tell you why
walking over.
everybody's here.
She's not
in
mic'd
just a
up,
minute.
and you can see her.
She's just her pretty face. I mean,
come on in.
All right.
Come on in.
Hi, Karen. For more market insight, head to tradingnation.cnbc.com.
Every trader should know that losses are part of the process. So in an effort to reduce your risk and define your max loss, consider using static stop or trailing stop orders. This can help eliminate emotion from your decision making and set you on the path to consistent trading.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.